Hello everyone, this is Juan Sarmiento and today is Friday, August 19th. Okay, I don't really have, well, perhaps I have one potential candidate. Let's look at it. It's CHDR, and you can see that the volatility is pretty low, but not as low as you would expect. And the earnings were good. Let me just put my indicator here. Let's change to the pointer. Here it is. They beat by a wide margin. So let's test that, okay? For starters, I recall my spreadsheet. And let's create a new one. And here we put the name of the stock symbol rather, CHDR. And then here we put the expected and the actual, and was 8.8 the actual, 8.8, and what was the expected? It was 6.915, 6.915. 6.915. So yeah, that was a big beat, as you can see. So, but the stock didn't move much. Okay, and now its volatility is low. So let's take a stab at it. Let's try first, go to the trade tab, look for the stock by checking all products, and we would do 91 days. That would be November. The strike price would have to be 450, and click there and then say buy custom Gini, and you may have saved your Gini. Okay, if not, please go to the previous video and take a look at how to generate this typical what is called custom order, okay, and create one of your own. Let's analyze that. Analyze trade, and here it is. Okay, so it's gonna cost me $6,620, which is less than 10%. I couldn't really double that because it would be 12,000, and that is more than 10% of my account. Okay, so the volatility looks good. You can see here at the bottom right corner of your screen that we have the volatilities of the back month options and front month options, and that they fit in my spreadsheet here. Back month calls, back month puts, and these are destined for the volatility. So 34.25, 31.39, 33.06, and 31.58. 33.52. Okay, so you can see that the skew is very minimal. It's definitely less than 3, and it's 0.27, so that's nothing. Okay, so those already very good. Let's look at the liquidity, and to calculate the liquidity, simply go to the trade and say create duplicate without creating it just yet, mid versus natural, and that is a wide margin, I think. So we're going to put here 66 on the mid, 66.1 versus 71, and that's 6.9. So it's very illiquid. So you're going to have trouble getting in and getting out. Okay, and so any gains you have to subtract the spread. Okay, that's the difference between, like, to enter it you may have to put your trade here like 68, so the 66 is not really valid. Okay, 68 perhaps for it to get filled, and what I'm going to get here is probably not realistic compared to the real life trade. Keep that in mind. And then finally, we need to look at go to the trade tab, scroll down and look for the today's option statistics, and the current IV percentile is 35, which is way too high. Okay, that's a -2. So then I decide, well, perhaps despite all the goodies there on earnings beat and the good skew, this two last issues are not good. So 35% is just not good. All right, so we would avoid that. But we do have a few. Yes, CHR, it was actually what we had last time, right? So we had it open and we didn't do it then. Let's look at the others that we had. Disney, we did get a field on our Disney trade. Let's look at the Analyze tab. And here it is. And so far, nothing. We have made 10, well, today we seem to be taking back some of the little profits we had on that. It doesn't matter, it's there. Okay, then we have, what else? TNUS. Let's copy it from here. Copy that trade. That's let's paste it here. T-Mobile is what it is. Okay, and that's copied. So let's analyze that and see what was the problem last time, whether it's been resolved. I can see that 29, 26, that's too wide. So it's too wide. This volatility skew is 4. If I change it, 29.58, 25.98, 24.41, and 22.62. That is if we were to use the same exact trade with the same strike price. This will have to change. Okay, so let's change it to 146. Well, 145 is probably the best we can do. Can we go further out? No. September, November, that seems okay. November is more than 90 days. November 18th is 91 days to be precise. That's good. September the 16th, the expiration of the front month. We can possibly do the September 23rd. So let's analyze duplicate. Analyze trade. That duplicates my trade, but we're going to change the expiration of the 1st to the 23rd, of the 1st of the short calls and puts, and see if that alters much. I don't think it alters much. Let's see. If it does, then we might be in business. 24.98, 23.11. Yeah, that's more than 3%, but it's getting closer. Okay. We did discuss the earnings wasn't that great, and then the liquidity was okay. Let's see. Create duplicate. And yeah, that's probably okay. 23.53 versus 24.2. Yeah, 2.8, that's fine. And what about the volatility? Go to the trade tab. The IV percentile is 20%. That's okay, acceptable still. But we can't really trade it when the other two have gotten. So I'm not going to trade it after all. Okay, that's all. We cover what candidates we could. Let's save that, get it out of the way, and then let's analyze all of our trades, see if we need to change anything, starting with Apple. Analyze tab, and here we have, look at the risk graph. That's the first thing, order of business. If the current price is above the smiley face, we can take profits by selling calls. If it's below the smiley face, we can take profits by selling puts. Not such luck. Okay, so nothing to do there. And we're positive. P&L from the opening is positive. So yeah, no need to change anything. The expiration is September. We don't need to do any rollovers. So let's move on to C. C is Citi. And in the past, I obviously took one call here, and you can still see my calls here. My deltas are positive. Okay, I took one call to reduce my deltas. Obviously, we were above 55. Let's look at the chart. Yeah, over here we were above 54, so that would have been above the cloud, above the smiley face, and by selling one call, we corrected our deltas, and okay, so that's good. Let's go to the monitor tab and scroll down here, and we see that, oops, we have lost a little bit, $140. So we're gonna leave that alone as well. The shorts are due to expire in September the 9th, and we have 2 weeks before that, 21 days before that. So no need to change that either. We let it, give it some time to work. COST, that's Costco, and here we have September the 9th, and the same thing, okay? Same expiration. October 21, okay, let's look at the monitor tab, and Costco. Year to date, we have a profit. Today is a little loss. Okay, no big deal. Let's go to the Analyze tab again, and we say, do we need to change anything? Look at the risk graph. Is it above the smiley face? Yes. Okay, so what do I do? Is at 557, and my call here is 520, so that's quite a distance. Yeah, what we could do is roll it up, and I'm going to show you what that means. First of all, how many calls we have that are long? 2. How many that are short? 1. Subtract 2 minus 1 equals 1. So we have one outstanding call. That's what I call one outstanding call. So the one outstanding call is what we can roll up. Okay? If we had many calls, let's say we have 10 shorts and 10 and 20 longs, you can sell one call, or 2 or 3, to adjust your delta so they're negative or neutral. In this case, I'm just going to roll it up, so because we only have one outstanding call. So what do? I say analyze rolling, and then we're going to say just one, and then adjust the expiration and the price. First, the price. We can put it at 560 or 550. I'm going to put it at 550. That means that call is still going to be is going to appreciate quite a bit if the stock goes up. So let's go 550. Okay, I'm going to sell my October 21 510 calls, and that's going to give me a credit. As far as the calls, we need to match the expiration date, which would be 21st of August, and doing that will give me almost $21, which multiplied by 100 will be 2,100 or $2,067. And that's not bad, is it? Create duplicate, confirm and send, and yeah, $2,067. But before I do that, let me just make sure that the resulting deltas are neutral. 615, that's very close to neutrality. If I did the 560, would that be negative? Okay, so if instead of 550 I go to 560 on my roll up, oh, that gives me $2,620. That's a whole lot more. But look at my deltas. Oh yeah, that's very close to neutrality. Okay, but if we wanted to make money still on the upswing, if we think this stock could go higher still, guess what? It's going to be a little harder. So I think that this is very close to neutrality. I'm happy with that. I think the stock has run up quite a bit. If it goes up to the new high, we would still make a profit. Okay, if it goes to 600, well, if it goes to 600, it will be here. It will give us additional profit. But I think it might go down, correct a bit. So I'm going to do the more extreme one here and get a little more credit, and that's fine. Okay, so let's confirm and send that. And before it fills, let's look at Costco. Right now, our current position is worth $7,757.50. If this gets filled, I'm going to recover. This market value will be reduced by $2,600. Let's wait until that gets filled. In the meantime, let's go to the account positions, and here is activity and positions. Here's my trade. Still, you just have to verify that my mark is higher than my limit order, and that's fine. That's a little higher, so it should get filled sooner or later, at least before the close today. Let's move on to CSX. Let's go to the Analyze tab. Okay, in this case, okay, look at that. Today's expiration for these two, and let's take a break here and let's go back to Costco and look at the account statement. And you can see I said it was 7,000 something. Well, look at it now. We have reduced our exposure by $2,000. We removed that capital that we can use in other trades, but we also collected some profits. Okay, all right, let's move on to here. What do I do here? It's interesting because I see the blue line is at expiration and the pink line is right now. Well, it turns out that the expiration is only a few hours away, a couple of hours away, which means if we didn't do anything, we would collect the difference between the pink and the cyan. It's really magenta versus cyan. Look at these two numbers as I put my cursor here. Okay, so the cyan color is what we should have at expiration, so versus what we should have right now. And you can tell that is about not quite $200, $150 more, something like that. So what I would do normally is, okay, I'll wait until the end. Also, you can see that these puts are about to expire. If I close it, I will get 5 cents if I were to close it right now. But if I wait to expiration, those 5 cents will be mine. Okay, so we could first roll the calls, analyze rolling, and we're going to roll to 1 month more, let's say September 16th. And that will give me 5 cents. I'm thinking that it's not a whole lot, 5 cents. And we have here at 30 is my strike price, and this is not that far out from it. It seems to me I'm not getting a whole lot for that. But what I'm doing is really extending the time in which these calls may become worthless. If the stock goes back down to 30 or below, those calls will lose value. But right now I'm getting 5 cents to do that. A 5 cents credit. Let's do it. And like you can see, you get a credit of $80. And what we're doing is extending the life of my short 1 more month, so that if the stock goes down, we will get that money back. And that protects us. The calls are 29. That means I have sold already 3 calls. As far as the puts, do I think that the stock is going to go below 30 before the close today? Not likely. So we could sell September puts. Okay, so let's create that. I'm going to start by creating this one here, which is closing this August put, which I'm not going to do at all. I'm just going to change this to a sell 16 September 16 puts, and that gives me another 5 cents. Okay, do I want to do that? Curious question, because if we don't do anything, this put will go away, and this is what my trade will look like. Do I believe that the stock will go below 30 in the next week? Possible. It's giving me a sell signal. So what I'm going to do is I'm going to let it be. Okay, this is going to become now a trade which has 16 short calls, no puts because these puts will expire, and then calls, 29 calls and 30 puts. And then next week, we can see if we would sell September. I'm going to even leave it here because right now I'm going to lock it so I remind myself that today I was getting 5 cents. If the stock falls to 29, I assure you I'm going to be making, I'm going to sell those puts for a whole lot more. So I'm going to hope that that's what's going to happen and leave it for now. Okay. All right. Let's move on to Disney. And Disney September, I'm not going to change. This is obviously what we entered last week. So far, since the opening, we have made $40. Today, we're losing a bit. And then GS, that's Goldman Sachs. And you can see that my deltas are negative here. Let's take a look at a chart. And yeah, it's quite possible that the stock will go down. It's giving me a sell signal here with the stochastic, but is still on the upswing because it's above the Ichimoku cloud. So this pullback may be temporary, but we'll see. Who knows? Who knows? The indication is that it could go to the Ichimoku cloud and bounce from there. Yeah, that's the most likely scenario, that it will go near, at, or below the Ichimoku cloud and then bounce from there. And we have our deltas are close to neutrality, and that's all that matters to me. As far as the shorts, they're expiring in September, which are 42 days from no 21 days from now. Okay, so no need to change that. Okay, let's go to the monitor tab. So far this year we have made $12,000. And that's about 10% of our account. A little more than 10% of our account. Okay. That's about it for today. Let me see if I have anything pending. Okay, this CSX, I don't know if it'll get filled, but I'll check back a little later on to make sure that I get it filled. It probably gets filled. It's only 5 cents. That's all for today. Thank you very much for joining me, and see you next time. Bye-bye.